So far what we discussed. So far we discussed what is the meaning of Oracle Fusion Cloud SCM applications and what is the meaning of instances, right?
Yeah. Lakshman, actually, before we start further, I have a quick question on instance. We have got 2-3 links.
One second. So instances, we discussed about instances. What is the meaning of instance? What are the different type of instances? And we discussed about implementation user. So if you need user to access the instance to work as implementation consultant, what roles we have to assign to the implementation user, those we discussed, and purpose of the roles also we discussed, and what is the meaning of offerings and options we discussed, and we have seen how to create the implementation. When you talk about offerings and options, we discussed about meaning of offering and options, how to enable the offerings and options, how to create the implementation project. After creating implementation project, how to update the status, how to assign the offerings, options, task list, and task to the specific team members. These are the points we discussed. So before we get into the application related configuration, let's try to understand the basic business flows or the basic business processes. Okay. So we are going to work on SCM, supply chain management. We should be aware of basic two processes, how we procure and how we sell, what departments are involved as per real business. According to that, what applications we are going to use in the system environment, we have to understand. When you understand about procurement, okay, how to procure or how to purchase, when you procure as a part of supply chain management, the finance should come into the picture to make the payment. The immediate action should be done by finance. When you sell something, the payment should be collected by finance departments from the customer. So that means there is immediate interaction with the finance. So that is the reason how that process flow works, how the communication takes place across the supply chain management departments and finance department, that also we have to aware. In today's session, we'll focus on the two basic process flows related to purchasing and paying and selling and collecting the payment from the customers. So here I have a simple flow diagram. Say these are the departments: inventory department, purchasing department, payables department, assets, cash, and common departments. So when we are going to work on supply chain management applications or finance applications, this is a basic process flow we should aware. Okay, we should aware. So we'll see this. Say for example, your organization received one order from the customer. One order from the customer. The order may be for 100 laptops. When your organization receives the order, so what we have to do is, first of all, we have to check whether stock is available or not. We have to check with the inventory department. Ideally, which department can receive the orders? Sales department. That I am not including here. In the next process flow, you can see that. Say sales department. The sales department received an order from the customer. The order details, when you look at the order details, they want 100 laptops. They want 100 laptops in 10 days. That is order sales department they received. When they receive the order from the customer, immediately they have to check with the inventory department whether stock is available or not. What is the responsibility of inventory department? They maintain the stock. Okay, they maintain the stock. They maintain the stock. When sales department will check with inventory department, say inventory department is saying that stock is not available, 100 laptops are not available. They may say no laptop is available, or else so they may say for example, only 25 laptops are available. Okay, only 25 laptops are available. If only 25 laptops are available, we received order from customer for 100. The rest of 75 we have to buy. Along with the 75, you may buy few more also so that you can maintain the stock. Now, whenever there is a demand in the organization, okay, we have to check with inventory department. If stock is available, we can supply to the customer and we can collect the payment. That is a different process. If stock is not available, what inventory department is going to do? Inventory department is going to raise the requisition. What purpose they are going to raise the requisition? To purchase. That we call as purchase requisition. Okay. The inventory department will raise the purchase requisition. That means they'll create purchase requisition. They'll create the purchase requisition. PR you can call. What details you can include within the purchase requisition? They can include, we need, say, 75 laptops and we need by so and so date. Okay. So which items required, how much quantity is required, those details we can include in the purchase requisition, PR. So for that purchase requisition, we have to get the approvals within the inventory department. Okay, who are working for inventory department or say warehouse department. So whenever there is a demand, if there is a shortage within the warehouse or inventory department, they create the purchase requisition and somebody has to approve it. Who is the authorized person within the inventory department? The person has to approve the purchase requisition. So approvals are required. If there is any shortage, inventory department has to raise the purchase requisition and they have to get the approvals. That's all. Their responsibility is maintaining the stock, and if any shortage, raising the purchase requisitions and getting the approvals internally. Then inventory department will pass that information to purchasing department. Okay, the inventory department will pass this information to purchasing department stating we need 75 laptops and we got approvals also in our department. So based on that, the purchasing department will create RFQ. Okay, request for quotation. Okay, request for quotation. That means the purchasing department will request the suppliers to provide the quotations by addressing what is our requirement. Our requirement is 75 laptops. Then purchasing department will ask different suppliers to provide the quotation as we need the price and all for 75 laptops. Then suppliers will provide the quotations. Okay, when our purchasing department is going to contact the suppliers to provide the quotations, the suppliers will provide the quotations. So the same quotations we will receive it. Okay, say we'll receive the quotations. Receive quotations from suppliers or call as a vendors. Okay, we receive the quotation from suppliers. We are requesting, the purchasing department is going to request for quotations. Suppliers will provide the quotations and will receive the quotations. After receiving the quotations, we have to do the quotation analysis. I'm talking about purchasing department. What are the other departments also can involve in these activities? We'll discuss later. For now, take as a purchasing department. Okay. So once we receive the quotations, the purchasing department will do quotation analysis. That we can call it as a quote analysis or quotation analysis. So quotation analysis. What does it mean by quotation analysis? Say our purchasing department contacted 10 suppliers to provide the quotations. Out of 10 suppliers, say 5 suppliers given the quotations. Now we have to analyze those 5 quotations. Who's giving at best price and who is offering at best terms and all. Say one supplier is saying, I can supply each laptop at 25,000 rupees. Another supplier is saying, I can offer each laptop at 22,000 rupees. Another supplier is saying, I can offer laptop at 20,000 rupees. So say this is how you got quotation from the different suppliers. When you talk about configuration of the laptop, say that is same. Okay, whatever is specified, accordingly they are ready to supply, but different suppliers are offering different price. What is the difference between those three suppliers quotations? The supplier who is saying we offer laptop, we can supply the laptop at 20,000 rupees. They are saying we have to pay immediately. If you make the payment immediately, they are ready to supply at 20,000 rupees. Another supplier who is offering at 22,000, they are saying you can pay in 1 month. The supplier who is offering price at 25, the supplier is saying you can pay after 6 months. So price is different, the same way terms also different. Now organization can take the decision, what is the best deal for them. Okay, prices are different because payment terms are different. Okay, you can get at 20, but you have to pay immediately. If you are not interested, you can go for other option. So that's how organization will take the decision which is the best deal for them. So by just going through all those details, they'll finalize one quotation. Okay, quotation analysis means they analyze what is the price and what is the other terms and all. They look into that and they'll take the final decision. That means they'll choose the best quotations as per their organization. As per their organization means they are ready to pay immediately, they are ready to pay after 1 month, they are ready to pay after 6 months, which they feel best option. Accordingly, they choose the best quotation. Okay, so they do the quotation analysis and they choose the best quotation. They choose the best quotation. After choosing the best quotation, the purchasing department will contact the suppliers by providing the purchase order. They'll place the order to suppliers. Okay, they'll place the order to suppliers that we call as purchase order. So purchasing department will create purchase order. The purchase order, they'll include who is the supplier, from whom they are going to purchase, and what is the item they are going to purchase. Item is laptop. How much quantity they are going to purchase. The item quantity may be 50. They may plan to purchase 50 quantity from one supplier, remaining 25 quantity from different supplier, or else they may place purchase order to only one supplier. They can take the decision. Okay, ultimately we need 75 laptops. Okay, already we have 25, we need 75 more in the inventory or warehouse so that we can supply to the customer. So they place the purchase order by including who is the supplier, what is the supplier address, and what items we need, how much quantity we need, what is the price for that item, and when supplier has to supply those items, to where supplier has to send those items. By including all these details, we create the purchase order. Okay, the purchase order in short you can call as PO. When we place the purchase order to supplier, supplier will respond to the purchase order by supplying the material. Okay, we are going to include everything in the purchase order, to where supplier has to send, when supplier has to send. So based on those details, supplier will supply the material. So you are going to specify supplier has to send the 75 laptops to our warehouse, then they'll send to our warehouse. Or else if you specify some other location, to that location only they'll supply. So whenever our organization will receive the 75 laptops from suppliers, we record the GRN. GRN stands for goods receipt note. Okay. So GRN, goods receipt note. We record the GRN, goods receipt note. Goods receipt note is nothing but, you can call it as receipt also simply. Okay. You can call it as GRN, goods receipt note, or receipt. So within the GRN, we include which items we received, how much quantity we received from the specific supplier. So say you received 75 laptops and 2 laptops are got damaged in the transportation. In that scenarios, we perform the purchase returns. Okay, we perform the purchase returns. Okay. We perform the purchase returns. This is the process we follow. Here, to raise the requisitions, RFQs, and to record the quotations and to do the quotation analysis and to choose the best quotation. Okay, you may just your purchasing department may do all those activities, or else you may have a separate department called as sourcing also. Sourcing. Okay, the sourcing department can manage all those quotation processes, or else the purchasing department itself can look after all those activities also. Totally depends. Okay. So generally you can see sourcing department, they'll keep in touch with the suppliers, they'll get the quotation, they do the analysis, they choose the best quotation. If sourcing department identifies the best supplier, then they'll pass that information to purchasing department. Then purchasing department will place the purchase order and they'll purchase from that supplier. That is the actual process. Or else in some organizations, you can see the sourcing activities and purchasing activities all can be handled by one department called as purchasing department. Just remember this point. Make a note of this point. Now, say we received 75 laptops to our warehouse. Now, purchasing department is going to pass this GRN information to payables department. Okay. The purchasing department is going to pass this GRN information to payables department by stating, so we purchased from so-and-so supplier. Okay, we received these many items or so-and-so items, so-and-so quantities, and you please make the payment as per the terms. So whenever purchasing department will pass the GRN information to payables department, based on the GRN information, payables department can create purchase invoice. They'll create purchase invoice in their books. What information they can include in the purchase invoice? Who is the supplier? What is the supplier address? How much amount we have to pay? Okay, when we have to pay? What is the due date? Okay, when we have to pay? How we have to pay? Well, we are going to pay through cash or check or bank transfer. Okay, all the details they will record in their books as a purchase invoice. So as per purchase invoice, due date is this month 25th. Then payables department will make the payment. They'll process the payment. Okay, the payables department will process the payment for that invoice. So when we are going to purchase something, okay, when we are going to purchase something, what we are purchasing, say for example, you are creating purchase order. Okay, why you are creating purchase order? To purchase. The purchase order may be related to different purchases. The purchase order you may raise to render some services. Okay, you may create the purchase order for to render the services from the service providers, or else you may create the purchase order for the expense also. So you spend some expense. You're spending some expense, you have to create the purchase order, you have to get approvals. Then you can spend some expense. Then payables department can make the payments to those suppliers. For expense purpose, you may create the purchase order, or else you may create the purchase order for the purpose of assets. You may purchase assets for your organization. You want to purchase land, or you want to purchase building, or you want to purchase laptop to use in our organization. If you purchase a laptop to use in our organization, that is asset. If you purchase a laptop to sell to your customers, that is just inventory item. Okay, fine. Or else you may purchase something, or else you can purchase items to store in the warehouse so that you can sell to the customers. Items. Okay. The requisition, what we are going to raise, that may be related to services. You need some services in the organization, you may create the requisition. or you want to spend some expense, you may raise the requisition, or you want to buy an asset for your organization. You want to say you want to buy the furniture for your organization. You have to raise the requisition. Or else you want to purchase some items for inventory purpose, to store inventory so that you can sell to the customers. The purchase requisitions or purchase orders, okay, you may create with the different purposes. By following the same purpose, purchase invoice will be created in the payables. That means the purchase invoice maybe belongs to service related purchase invoice, or expense related, or asset related, or item related, inventory item related. So in payables department, if they are creating the purchase invoice related to asset purchase, the payables department will pass that information to asset department. Okay. If the purchase invoice related to service, expense, or inventory related items, they are not going to share that information with the asset department. If the purchase invoice is related to asset purchase, that means fixed asset, land, building, furniture, computers, okay, which you are going to use for your business purpose. So those you have to treat as assets. So if the purchase invoice is related to asset purchase, then payables department will pass that information to asset department, so that asset department can create fixed asset. And based on the usage, they calculate the depreciation. So for example, they purchased one plant. Now they purchased the plant with the 10 lakhs. After 1 year, what would be the value of that plant? Maybe 8 lakhs. The 2 lakhs we call as a depreciation. The 10 lakhs plant, after 1 year, the value will turn into 8 lakhs. The variance you call as a depreciation. So you, for example, you purchased one land. Now you purchased it at 10 lakhs. After 1 year, that may be 12 lakhs. That we call as appreciation. So the depreciations or appreciations, the asset department can maintain in their books. Okay. So when payables department has to share purchase invoice information to asset department, if the purchase invoice is related to asset purchase, then they have to share that information to asset department. Based on that information, asset department can create fixed asset in their books. Based on the usage, they can calculate depreciation. If the purchase invoices belongs to service related purchase invoice, or expense related, or inventory item related, the payables department is not going to share that information to asset department. Only if purchase invoice is related to asset, they will share with asset department. At the same time, the payables department will share the payment information with cash department. What is the responsibility of cash department? Cash department maintains all the bank accounts. Okay. See, even this part is not belongs to us. We should aware. In our classes also, I'll take you through how to create the purchase invoice, how to make the payment also. Okay, we should aware the full cycle, how the business takes place across the departments. That's very important. Okay. Our primary focus would be on SCM. But along with SCM, you have to understand these finance related departments, what activities they do. If you create like GRN, what is the next step? So tomorrow when you are going to work on SCM, the payables finance team says, I'm not able to create the purchase invoice based on the GRN. Then you should be able to help to those payables department team. For that reason, you have to understand what transactions they record, how they record based on the activities, what we are doing in the purchasing or inventory. For that reason, you have to understand these points. So what payables department will do is once they make the payment, they'll share the payment information with the cash department. What is the basic responsibility of cash department? The cash department very primary responsibility is they maintain the bank accounts and they perform the bank statement reconciliations. Okay, they do the bank statement reconciliations. Why cash department performs the bank statement reconciliations? The first activity is they maintain the bank accounts. what are the bank accounts are owned by organization, all the bank accounts they can maintain. With those bank accounts only, payables department will make the payment if there is any purchase invoice based on your GRN or receipt. So the cash department responsibility is maintaining the bank accounts and performing the bank statement reconciliation. How they do the bank statement reconciliation? What cash department can do is they get bank statement from banker. Okay, one side they get the bank statement from banker, other side they get the payments report from payables department. Okay, from payables, they get from payables department, they get the payments information. So as per payables department, the received report, it says the payables department processed 100 payments in this month, but your bank statement showing only 80 payments are processed. In this month, payables department is given the report to cash department, 100 payments we processed to different suppliers. Okay. And bank statement is showing only 80 payments are processed. They have to find out the difference. They need clarity. Payables department is saying 100 payments are processed. Bank statement is showing only 80 payments are processed. Why this difference is coming? They have to analyze and they have to find out the reasons. What could be the reasons? Yes, payables department processed 100 payments. Say, for example, they given 100 checks to the suppliers. And say 100 suppliers submitted checks in the bank for clearing, only 80 payments are cleared. Or else you given 100 payments to 100 suppliers. Payables department given 100 payments to 100 suppliers, or few suppliers 100 payments they given. But all the suppliers not yet submitted in the bank for clearing purpose. The checks are not submitted. Whatever the checks are submitted, in those checks, say 80 checks only cleared, 80 payments only cleared, or else 90 checks are submitted, 80 checks only cleared. So this is what we have to understand. Sometimes we can see payables department says we processed 70 payments and bank statement may show 80 payments. Payables department is showing, providing the report to cash department, we processed 70 payments, but cash department and the bank statement is showing 80 payments are processed. How come 80 payments can be processed through bank account in this month when payables department is giving the report only 70 payments they issued? They have to find out the reason why the 10 additional payments. One reason could be payables department say they forgot to enter the remaining 10 payments in their books. They given the payments to the suppliers, they issued the checks, but they forgot to enter in their books. Or else, so whatever the report payables department is giving, that is very accurate report, but bank statement is showing 80 payments are processed. The additional payments, whatever processed through bank account, maybe some fraud is done in the organization. Somebody did some fraud. So real payments are 70 only. As per bank statement, 80 payments, 80 checks are processed. The 10 checks, the accountant issued to somebody, and that's how that could be the fraud in the organization. So if you analyze this, you can understand, so that you can have a communication with the supplier saying that I issued 50 checks to you or 50 payments to few suppliers, or else I given 2 checks to you. I don't see those checks are submitted by you. Already given 1 month back. So any issue you have with the checks, that's how the payables department can talk to the suppliers. If any help they require, this payables department can help to the suppliers to fix those issues. So this is how cash department can perform the bank statement reconciliations. Always they'll verify. So as per payables department, how many payments are processed, as per bank statement, how many payments are processed. Okay. So this we call as bank statement reconciliation. Cross-checking the records between the payables and the bank statement, we call as bank statement reconciliation. And other task is cash department responsibility is maintaining the bank accounts. So this is how different departments involved in the different activities when we are going to purchase and when we are going to make the payment to suppliers. And finally, you can collect data from all the departments to create the financial reports. So there could be separate department or there could be people who will involve in the process of collecting the data from all the departments to prepare the reports based on the activities which happened across all these departments. Okay, so the common department or specific people can collect the data from all these departments, what exactly they are doing. Okay, all these activities related data they can collect so that they can prepare the financial reports. So this is how the procurement process can get initiated. Whenever there is a demand in the organization, the inventory department can raise the purchase requisition and they'll get the approvals. Then that will be moved to purchase department or say sourcing department. They'll create the RFQ, request for quotations. They'll receive the quotation from suppliers. They analyze the quotations. They choose the best quotation. They'll place the order to supplier. Again, here also they need approvals. Okay. And they're going to send purchase order to supplier. So internally they have to get the approvals. They have to get the approvals by purchasing department. So once the purchase order is approved, they'll submit the purchase order to supplier. Then supplier will supply the material, whatever the items we requested, supplier will supply and will receive into our organization. The moment we receive, we create the GRN, goods receipt note, or you can call it as a receipt, and will perform the purchase returns if anything you want to return to the supplier. Say one laptop condition is not good. You received 75, one is not good. You want to return, you will perform the purchase returns. Finally, purchase department will pass GRN information to payables department saying we received from so-and-so supplier this much so-and-so items with so-and-so quantity. Accordingly, they'll create the purchase invoice based on the purchase, based on the GRN, goods receipt note. Payables department will create the purchase invoice and they'll make the payment. And sharing purchase invoice information to asset department if the purchase invoice belongs to asset purchase, and sharing payment information to cash department to do the bank statement reconciliation is purely internal activities. Okay, if you want to share with the asset department, share, otherwise don't share. If you don't want to share cash payment information to the cash department, you can share, otherwise don't share. The process is not going to impact. So you are procuring and you are paying. Okay, so this process is getting initiated with a requisition. This process typically ends with the payment. The rest of details what we are discussing internally, we are sharing the data with other departments. So this is how the procurement and payment can take place. Okay, for each department we have a different applications from Oracle. Okay, from each department we have a different applications. So we'll talk about what are those applications on top. Okay, for each department, what we are discussing here, those are very primary activities. Okay, when we just talk about inventory department, they do many other activities as a part of warehouse activities. Those all we'll discuss. To understand the process flow, this is what we have to understand. Primarily what inventory department is doing, they are going to maintain the stock. If there is any shortage, they have to raise the purchase request, they have to get the approvals, and they do many other warehouse related activities. To do all those activities, we have an application from Oracle that we call as Oracle Fusion Inventory. Short name is INV. Okay, so warehouse department or inventory department can use the application called as Oracle Fusion Inventory. By using this application, they can maintain the stock and they can create the purchase requisition. They can do many other activities also. Okay, that we'll see very detailed level in our classes. And for purchasing department, okay, for purchasing department, we have an application from Oracle that we call as Oracle Fusion Purchasing. The short name is PO. So by using Oracle Fusion Purchasing application, the very primarily you can create the purchase orders and all. If you want to create RFQs, quotation process, etc., this all you can manage by using the application called as Oracle Fusion Sourcing application. By using Oracle Fusion Sourcing. By using Oracle Fusion Sourcing application, you can do the quotation process and all. Okay, directly in the as a Oracle Fusion Purchasing application, you cannot create the quotations and these all activities. Quotation process you cannot do with the purchasing application. The purchasing application you can do the activities like raising the purchase orders and all these activities you can do. And what payables department is doing? Payables department is creating the purchase invoices based on the GRN information, and they are making the payments. To do these activities, to create the purchase invoice and payments, we have an application from Oracle that we call as Oracle Fusion Accounts Payable. JP. Okay, by using Oracle Fusion Accounts Payable application, we can create the purchase invoice and we can process the payment. And to create the fixed assets, okay, if we are going to purchase assets for the organization, yes, we have to raise the requisition. Say you want to buy the building, you have to raise the requisition that should get approved. Okay, so you are not going to store that building in the warehouse, but the process you should follow. Okay, you have to raise the requisition to buy the building internally, like we have to get the approvals. Once it's approved, so you may request for the quotations like these many floors or this much storage of the building we need. You can send the quotations to builders, okay, and they'll provide the quotations and you can analyze and you can choose. Finally, you can place the order to that builder, and that's how you can just purchase. And against that, you have to create the invoice to make the payment to that builder. That invoice we call as asset invoice. Those asset invoices, the payables department will share with the asset department. The same information they'll record in their books as a fixed asset, and they calculate depreciation based on the time or usage, etc. To create the fixed assets and to calculate the depreciations for asset department, we have an application called as Oracle Fusion Fixed Assets, called as FA. Application name is FA. So what cash department is doing? Whenever payables department is making the payment, they will collect the payments data. Other side, they collect the data from the bank, nothing but bank statement. Between the payables report and bank statement report, bank report is nothing but bank statement. Okay, they cross check payables payments report records with bank statement, and if there is any mismatch, they'll try to find out the reasons. So that is the activity of cash department. Along with that, they are responsible to maintain the bank accounts. To maintain the bank accounts and to perform the bank statement reconciliations, we have an application from Oracle that we call as Oracle Fusion Cash Management. CM we call. Okay. The actual name is CE, but we call as CM only, cash management. So because there is another application called as cost management. Cost management, that also you can, short name is CM. That is the reason for cash management, the actual real name as per documentation or applications system, CE only, CE, but generally we call it CM only.
E stand for?
CE stands for cash entry system.
Okay.
Cash entry. Yeah. So that is a short name. So all these departments, for each department, you can use the different applications. Okay, from all these applications, to pull the data into one place to prepare the financial reports, we can use one application from Oracle, that is Oracle Fusion General Ledger application. Short name is GL. Okay. So here, reality, we don't create any transaction in the Oracle Fusion General Ledger. From all the applications, from inventory, purchasing, payables, cash management, fixed assets, from all the applications, we collect the data to this application. Here we can prepare the reports across all these application related activities. That's how we can use the General Ledger application. So this process, okay, whatever we discussed here, okay, whenever there is a demand, we raise the requisition and we'll just go through all these activities, we'll make the payment. Okay, these process, whatever we discussed, we call as P2p cycle. We call it as P2p cycle. What does it mean by P2P? The first P stands for procure. The 2 stands for TO2. And another P stands for pay. Procure to pay. Okay. Yes, the process starting with a procurement activity. The procurement activities is getting initiated with the requisition and we are purchasing. Finally, we are paying. So primarily these 3 applications, or you can say these 3 departments are involved. Inventory department, purchasing department, payables department. The 3 departments are primarily involved in this P2P cycle. Okay, P2P, procure to pay, right from procurement to till we make the payment. What are the departments are involving? What are the those departments? What are the process are going to be followed? That process we call as procure to pay process or procure to pay cycle. Why we are calling it a cycle? It is repeated activity. Say today you want to buy something, you have to raise the requisition and you have to get the quotations. You have to request for quotations, you have to receive, you have to do analysis, and you have to place the order, you have to receive, if required, you have to return, and you have to create the purchase invoice, you have to make the payment. And say today you purchase laptops. Tomorrow again you are going to buy the laptops. Tomorrow itself, if you are going to buy the laptops, this process you no need to follow. Today only we identified who is the right supplier to supply laptops. Tomorrow if you are going to buy, raise the requisition, how many laptops you require, get approvals, then directly place the order to supplier, because you know you identified yesterday only who is the right supplier, who is giving at best price and the best terms. Then raise the purchase order and receive the material and create the purchase invoice and make the payment. After 1 month you are going to purchase laptops. Then again you need quotation process. Within 1 month there could be changes in the price. Definitely you have to follow the complete process. That means the process is repeated. Whenever you want to purchase, you have to follow this process. That is the reason this we are calling as a cycle. Okay, procure to pay cycle. Procure to pay cycle means, so the procure right from requisition to till we make the payment, this we call as a procure to pay cycle. So why we are talking about these departments or these applications also? When we are working on this process, what are the activities we are doing? The result of activities data we are going to share with these departments or applications. So when you do this procure to pay cycle, procure to pay related activities, process related activities, what are the purchase invoice we are creating? If the purchase invoice related to asset related purchase, that we have to share with the asset department. And payables department, what are the payments they are making? Why they are paying? Because there is purchase invoice. Why the purchase invoice is there? Because we received material. So because of these reasons, so we paid that information we are going to share with the cash department. So to perform the bank statement reconciliation, that is the reason. So through this P2P cycle, whatever the activities we done, the result of the activities data also, we are going to maintain in which departments or by using which applications. We are including these applications also as a part of P2P cycle. Okay. When you say what are the different applications are involved in the P2P cycle, you have to address all these, and core applications or core departments are these 3 only. Reality, the process starts here, ends here, but the relevant data we are sharing here, everywhere. So that is the reason P2P means this is what we have to understand. Okay. Somebody is going to ask you, could you please explain what does it mean by P2P? You have to explain. P2P stands for procure to pay cycle. In procure-to-pay cycle, whenever there is some demand in the organization, we raise the purchase requisition, okay, and we get the approvals. That activities are done by inventory department. Then based on the approved purchase requisition, the purchasing department can request for quotations and will receive the quotations. We do analysis, we choose the best quotation. Finally, we'll place the order to supplier with the approvals that we call as purchase order. Whenever our organization receives a material from supplier, that we record in our books as a GRN, goods receipt note, or you can call as a receipt. If anything you want to return to supplier, we perform the purchase returns. And finally, the purchasing department will pass GRN information with the payables department. Based on the GRN information, payables department creates purchase invoice. As per the due date, they'll make the payment. If the purchase invoice related to asset purchase, payables department will pass that information to asset department. Based on that, asset department will create fixed asset and they'll calculate the depreciation based on the usage. And payables department will pass that as payments information with the cash department for bank statement reconciliation purpose. All the departments will share the data with the common department for financial reports preparation purpose. This is how you have to explain. So wherever applicable, you can include the application name. Mostly you have to explain by referring the department name. So this is all about P2P cycle. So any questions here, please?
Yeah, hi, Lakshman. Ramesh here.
Yeah, please.
Can you hear me?
Yeah.
Lakshman, so in fixed assets, while as you said, once we procure assets, it goes to assets. So there is no bank. It doesn't goes to the bank statements or nothing comes out of fixed assets.
No. Fixed asset, just you maintain all the assets. See how many buildings we have, what are the lands you have, what are the furniture you have, machinery, plants. Okay. So what are the assets you are using while you are running your business? Those you maintain within the fixed assets application.
Yeah, but anyhow, we will purchase from supplier itself, right? Even whatever the furnitures or whatever we use within our.
We are purchasing and we are paying. That everything is happening. Purchasing and all happening in the purchasing department. Payment is done by payables department. So we are buying one asset. That the assets information need to be maintained by asset department. So asset department is recording in their books separately.
Okay, that invoice goes to only fixed asset.
Yeah, as purchase invoice belongs to asset. That only will goes to asset, fixed assets.
Yeah, okay. So it
other
doesn't
invoices,
go to
no. Other invoices related to services, invoice related to expenses, invoice related to warehouse related item purchases. These invoices information we never share with the fixed assets. Only asset.
Okay. But finally, they will reconcile. They will reconcile all this fixed assets as well as services, expenses, and items, whatever in the bank statement, right?
Bank statement, no. See, bank statement, what they check, payments or whatever they receive, what they received or what they paid. You are going to open your bank account. Do you find your car, bike, and all in the bank statement? No, right?
No.
That's all. The fixed assets maintain the assets which they have in their business. So when we talk about cash, bank accounts or bank statement reconciliation, your fixed assets nowhere connected with the bank account or bank statements. Only what you paid or what you received. How you have as per your books, how you have as per your bank statement. That only we have to check.
So, Lakshman, if you are paying for any mortgage or any loans, that means in that during that, you will see those in the bank statements, right?
Yeah,
the monthly payments.
Payments, everything will come into the bank statement. and that could the payments means you have to process within the payables only. Say for example, you purchased one building, you sold it. Okay, when you sell, you will you get the payment that you will record in the receivables application. You purchased asset, you have to pay from payables. So that's how we have to record. Okay. So we no need to do anything with the fixed assets in your bank statements or bank accounts. The fixed assets, your assets are not connected. Your cash, those are like related to bank account, but not your fixed assets.
Okay, in this case, see, for example, in the bikes and cars, I purchase a bike or car, so I pay that amount to the concerned automobile. So that will reflect in my bank statement, right?
Yeah, that's what I'm discussing. Payment. Why you are doing payment for any purpose? You purchase on billing. You are paying for billing from payables only, here only. That will reflect in the bank statement. Okay.
Yeah, that's what.
When you purchase, you pay definitely. That's what I'm saying. The purchase invoice related to asset, you will share here. For that, anyway, you have to make the payment, right?
Yes.
That will reflect. Asset purchase related payments or service related payments, all payments will be reflected. But asset will not be reflected over there. Okay. Billing won't reflect. For billing purpose, how much you paid, that will reflect in the bank statement. That's what we have to understand. Any other questions? Please?
Okay, the asset value or the depreciation will not be reflected in the.
No.
Okay.
Management or bank account or bank statement, those won't reflect in that. What you paid, that will reflect. You may pay for asset, you may pay for service or expense or goods. Those will reflect, but the assets won't reflect. See, just you are doing the bank statement reconciliation to cross check. Okay, what your payables department is saying, that is the same as a bank statement or not. What bank statement is talking, does is same equal to your payables department or not? You are cross checking. That's all. Any questions?
Okay.
Yeah.
Okay, so that's it. So almost we have majorly like 3 types of items. That is items, stocked items. That is for inventory, stockable and transactable. And one is inventory expense. That is expense items. And another one is inventory asset items. Asset is, this is what we just you explained.
Yes, correct.
Okay, stock and expense is just like items. Stock is inventory. Stock is inventory items is stockable and transactable.
Yeah, items means inventory items.
Inventory items. Expenses like it can be kind of services or subcontracts, something.
Yes, that's all. Anything that you can call as services also, or else, for example, your team is going for outing. Your manager will raise the requisition. They'll clear purchase order. Ultimately, payables department will pay for that.
Yes.
That's all. It could be any expense. Our employee spends some expense, they purchase stationery. They may submit the bills for reimbursement. Payables department will pay for them. That is those are expenses. Yeah. So,
okay, but
how to understand about P2p cycle? Any questions here, please? Yeah.
Yeah, we have a destination type like item, inventory items and expense items.
Correct.
Inventory and expense.
Yes.
So in this expense, we also have routing as inspection required also, right?
Correct.
So in which case that we have expense as routing as inspection required for expense items?
Yeah. So ideally that we will discuss when we are dealing with that concept and application. But since we have a question, I will answer to you only. Others are not aware of it, ignore it. Who knows that anyway they knows. See, purchasing one item. Okay, you're purchasing one item where the manufacturing date and expire date would be on that item, for example. Those definitely when you are receiving, you have to check. You have to check. So the item what you are receiving, say within 1 day or 2 days, that will expire, or else already that expired product you are receiving, what you do? You have to reject. If you do inspection, then only you find out, right?
Yes, yes.
So based on the nature of item, for what nature of items you have to inspect and all that you have to understand. Say for example, you are just purchasing any item you take. You are purchasing some item, some clothes or some mobile or anything. If there is chance there will be some damage for that item when you receive, or else there is some chance where that item may expire. In such kind of scenarios, you can take the decision. So and so items need to be inspected. After inspection is passed, then only we have to receive into organization. Say you are purchasing fruits. Supplier supplied the fruits. You received at your office. When you receive that fruits, you will check. Definitely you have to check it. If supplier is supplying iron, you may not inspect. Okay, you may not inspect. But if you are receiving fruits from the supplier, what is the condition of the fruits you have to inspect? That is a mandatory. That's how for which items definitely you have to verify before receiving. For those you go for inspection. We can set it up in the system.
Yeah, that I got it, Lakshman. Like if it is a stockable or transactable item, then I can go for inspection required and everything. I can inspect the item and I can get into the organization and I can do something in floor manufacturing.
Yeah.
Yeah.
Yes.
If it is an expense item which is not stockable and expense is not stockable and transactable, right?
Yes.
So which
See,
case,
whatever
like,
you are receiving, for that only you can do the inspection. Okay. So other than items, something, some services or some expense or something you are doing, that you have to manage outside of the system. Ideally, that there is no such kind of thing which you can do in the system. Whatever you are receiving, you will receive, you will create receipt, and for how much quantity you receive, 10 quantity you receive, and you will inspect. Okay, 8 are fine, 2 are not okay. 8 you accept, 2 you reject. Okay, that's how you can manage. Ideally, for physical items only, we can verify. Services and all, that's a different story. That it's not like we cannot just.
Yeah, services I got. Only expense I just have a
expense, just it's all about you spend. That's all. How much you spend. That's all. No inspection at all. Okay.
That's what.
In the organization, there may be some process outside of the system. So based on that verification and validation or inspection, they may process in the system as the next steps. That's all.
Okay.
Right. We'll see in the system. Okay. When we are working on the system, we'll just come across all those, how we can receive in single step, how we can receive the 2 steps, how we can receive in the 3 steps where we'll do inspection and accept only, we'll take, rejected, we'll send it back, how to perform the purchase returns. We'll go through all these scenarios.
Okay.
Now here focus is what is the meaning of P2p cycle. Okay, what are the departments are involved for each department, which applications we have, what is the primary responsibility of each and every department. So this is what we are trying to understand here. Once we just dig into any process or any application, yes, there are many things which you have to understand. Once we start working on the application, we'll just discuss and we'll understand and we'll work on the system one by one. We'll do that. So any questions here, please? No questions. Right. It's 45. We have other cycle like sales process, and we have to discuss few more things. So better we can discuss in the tomorrow session. Okay. So today we can wind up. I'll start the session from tomorrow sharp 2:30. Okay. I'll send the meeting link before 10 minutes. Please try to be available sharp 2:30 so that we can run the session from 2:30 to 4 o'clock. Today we started little late. So we're done for today. Any questions, please? If no questions, we'll connect tomorrow. Okay, from tomorrow, we'll run the session. So minimum 1 hour, 30 minutes, and we'll start sharp 2:30. So any questions,
Okay.
please?
Yeah, Lakshman, since in the beginning I was in some other meeting. So regarding the instance, which is the instance we have to use? I didn't get any instance URL.
You didn't get an instance URL. Just 1 second.
Lakshman, ERPTREE dot, what is it? ERP.tree or?
ERPTree.com@gmail.com. This is the mail ID.
Okay, ERPTree.com.
Yeah. Right.
Thank
you. Yeah. If no questions, we can connect tomorrow same time. Thank you all.
Thank you.